Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media. Also, please subscribe to the channel if you haven't done so already and like the video. These take a long time to make. This is how you learn. If you want to learn how to trade and learn what I'm doing, then you need to watch these videos and see what's behind the process and what I'm thinking and stuff like that. So I did finish the week with 29 wins and 3 losses with a win rate of 90.63%. So I did have another very strong week. I think one of the two of the losses I could have done without, but it is what it is. But yeah, 29 wins and 3 losses. That's very pleased with that. Exceeded my weekly goal of 80%. I'm trying to aim for better numbers this year, every day and every week, every month, of course. So trying to be more selective, trying to be more patient. But regardless of how patient you are, just you get faked out. Just things happen. There's nothing you can do about it. So just have to do what you can. Now, you can also go on my Twitter page and you can see the timestamps of the alerts. Now, let's see. Monday I had... Where is Monday? Okay, let me get to the Trade Ideas channel for Monday, which is the 10th. I said SPY calls over 463.50 and Netflix calls over 541. So I took Netflix right out of the gate, it looks like. No, not at 9:40 I took Netflix. So let's see. Monday is right here. Now, one of the things I'm thinking about on Netflix is, first of all, I mean, look at how beaten down it is. All-time high is around 620, and Monday the 10th is what, right? Yeah, right here. So we're down to the 540 level, and going into earnings this week. Actually, yeah, earnings is this week, but you know, usually Netflix has a week or two or a few weeks before earnings that likes to run like crazy, and it hasn't. So I really thought this past week it was going to run, and it didn't, but it did break the level. Now I called the level of, what did I say again, 541, which is right here over this area. But because it came back down and it dropped it open, I readjust my my target to pre-market high, which is right here. I mean, I know this is after hours, but I'm talking pre-market. So initially I had it up here, and if you're in the room and you know how I'm doing things, and I always say that when it drops at open, I readjust my entry. I'm looking for a rate in this area of the 3750-ish area. We'll round up to say 538, and that's where I did get in. So I did grab the actually, I think I probably got in up here further. Actually, you know what, I think I actually did wait, now that I'm looking at it, but I should have taken it down here. I think I actually did wait for up here, because I got the 555 calls at $4.60, and they went from 460 to 570. So I actually, you know what, I actually did grab it right here. I should have grabbed it back down here, but 90% of the time I do. But probably because being Monday, I'm very hesitant about taking calls, options right out of the gate, because of the long weekend. Sometimes I just need a little time to see how things play out and stuff like that, because sometimes you get these Monday fake outs that end up, and this is exactly what it ended up doing. It did pop then drop, but when you grabbed it at 460 and it went to 570, I mean, if you're up $1 on anything, you take it. You don't don't sit there and hope and wish for home runs, because you don't know which ones are going to be the home runs or which ones aren't. If you sit there with the mentality that you want every trade to be a home run, you're not going to survive. You're not being realistic. You need to take what the market gives you, because if you're sitting there for home runs, you're only going to get like 5% right, 10% right. I mean, you just cannot trade with that mentality. You need to take what the market gives you. Watch time and sales. Watch the chart. And when you see things starting to turn, that's when you get out and stuff like that. And if you're in a winning position, you don't sit there and have a nice winning position and let it turn red. Even if it does pull back just a little bit to make the option red, and you stop out a break even, then it takes off. That's still a win in my book, because you got out green, you stayed green, and you didn't hold it to red. Because if you held it through red and did take off, I mean, you're just hoping, and 90% of the time it will not turn back green and go in your favor. So you just gotta watch time and sales. You gotta watch the chart, and just take the base hits. You don't want to just always look for home runs, because you're not going to survive off doing that. So then the next one I took was actually they were all SPY on the 10th. Or is it right here? I took SPY calls. Is this the 10th? No, this is this Friday. This is the 10th right here. Blow this up a little more. I took SPY calls at 10:30, which is right here. I grabbed it right in here. Got this. First of all, you're at 467, and it's dropped down $10. I mean, $10 drop from pre-market to here. I always think if SPY gets down $10 or ES gets down 100 points, it's going to bounce almost every single time. And that's why I grabbed the 458 calls at 10:30 at $1.65, and they went from $1.65 to $1.92. You if you can get 30 cents out of SPY, I mean, that's pretty good, because usually on SPY, when it chops, you're lucky if you even get 5 cents. So almost a 30-cent move on that, and you can't complain. Then I ended up grabbing the 458 calls again. So I grabbed it right here, got this little bounce, and it dropped down, and I grabbed it again right here at 1040, which I think was in this candle right here. This time I got them $1.14, and went from $1.14 to $2.73. So from right here to here. So, and this is the one thing you always gotta look for, is that when you see price, I mean, look how far price is right here, from the 20 moving average, which is the blue line right here. This is the 20 EMA. When price gets this far away from the 20 EMA, it always likes to come back and retest it, and it did right here. You can almost bank on that. I wouldn't say it's 100%, because nothing is 100%, but this is probably 90-95% accurate. Anytime price gets away from the 20 EMA, when it gets to it, it's going to retest it and try to bounce. Now, if it's the other way, it's going to have the opposite effect. If it's up, it's going to come back and bounce off the 20 EMA. So, yeah, this is exactly what it did. So I got the first set of calls here, 458. Then this one, I got 458 calls. Then I ended up getting 458 calls again at 12:20, which is right here, right in here. Now, the reason I was looking at that, because first of all, you got the $10 drop, the little exaggerated, taking out stops move right here. As you can see, it's also a bullish divergence, because it's making lower lows, and histogram is making higher lows, or flattening. Yeah, it's a little bit higher. So they like to do this, get people in, then flush out the stops before the move happens. And then it did happen, rejected the 20 EMA. Now, it came back and tested this breakout level right here, 458. That's why it held, and that's why I grabbed it. And the 458 calls I got this time at 12:20, which is right here. And they went from I had got them at $1.39 this time. They went from $1.39 to $5.58 if he held all the way through. So that was a nice 300% move. This was a nice 100% move right there. So then I end up switching to puts, SPX puts at 226, which is right here. Now the reason I did that, pre-market, we get the high a day, which is right here, pre-market high, well, not pre-market high, but the pre-market consolidation right here. So I thought I was going to reject a little bit, so I grabbed the SPX 4625 puts at $2.50, and they went from $2.50 to $4 in this little move right here. I mean, it doesn't take much. Then I ended up grabbing them again at 342, which is right. Actually, no. The move from 342. Okay, right there. Okay, yeah, I grabbed it right in here. This is the flush that brought it down to went from 250 to 440. So that was the little flush right there. Again, same here. Look how far I got disconnected from the 20 EMA, and look where it went, exactly to the 20 EMA. I mean, you could have even bought calls right here again on this dip right here off the 20 EMA. So this is a perfect example of when volatility comes in, you have these massive swings, price gets far away from this blue line, it's going to come back and retest it. That's why I use the 20 EMA a lot. That's why I like the EMA rejections and bounces, because it happens so much. It's just ridiculous. So then the last play of the day was SPX 4640 puts at $2.10, and they went from $2.10 to $3.60, which is this candle right here. Now if I blow it up into a 3-minute candle, you're going to see exactly what I did. Is this the 10th right here? Yeah, it is. What time was it? 3:42, which is this candle right here, right there. This is that one candle where I went from 210 to 360. Now it's a $1.50 move. I mean, when you have SPX that moves massively, and you're up $1.50, and you're not taking it, you need to readjust what you're doing, because you at least need to take a good portion of it and just stop out at the break even on the rest. You can't sit there and hope for a home run, because you're just not going to do well if you do that. SPX, just take the rules of sticking to a 50 cents to $1 move, and you'll do very well just off that alone. And if you take a hit on a loss, then you just adjust in size, and that will balance everything out. So that's something you just have to learn over time. And SPX is very tricky, and small little moves can make plays go or drop significantly. So that's why you can go down 100% on SPX, 50% in a blink of an eye, and that's why people say, "Why is it always 100%?" Well, first of all, it's a lotto, and that's the way I play lottos. And if you don't like the way I play lottos, then don't play the lottos the way I do. So a lotto plays, especially the SPX, you can lose 50% of its value in a heartbeat. So and just kept SPX is not for everybody. So if you don't like the swings and don't like the way SPX has the moves like that, then don't play it. Plain and simple. Use SPY at the money, which is a lot more controllable. Now on Tuesday, no, actually on Monday I had 7 wins, so I was actually still going flawless. I think my flawless streak ended on Wednesday. So because Tuesday I had 5 wins, I had SPY again on the 10th, the 11th. Let's see what the trade idea is. We're headed for the 11th. Microsoft calls over 316, SPY calls over 467, VA puts under 208. And I readjusted my play. Okay, I was saying, what was I saying, 467, which is right here, pretty much this area right here. But as you can see, I was using this level because I can't use this right here because you get these small little moves on SPY, and if you use this right here, they'll like pop and drop it. So it's better to use, I really didn't like wanting to take it up here anyways, because it's down here at 465 and it's already going to run $2. So I just used that level, and then when it started to pop just a tiny bit right here and it wasn't going to go anywhere, I did switch sides and take the puts right directly after. At 9:35, I did switch to puts because it failed to take off and it just started to drop. I took it right underneath this 465. We'll round up a little bit. When it broke that, I did take that. So in fact, I think I chased it quite a bit. Timestamp's 9:35. I mean, I probably chased it. Probably chased it more or less. Probably down here. Let me see what the other. Yeah, I chased it probably down here a little more. But still, it was a strong candle. So yeah, I had the 460 puts. As you can see at this point in time, the 464.50-ish area is the current price, and I'm going $4 out of the money. It was so expensive even for SPY because it's a non-expiration day. Even on non-expiration days, at the money for SPY on non-expiration days are usually about $1.50, and they were $1.50, $4 out. So that just shows you how much implied volatility was. And the 460 puts went from 145 to $2.03. It didn't go that much because it was so far out of the money, but I've been trying to get, a little closer to the money on some of the calls because of they do not move that much if you get too far out of the money, especially if you like Roku and Tesla and stuff like that, which we'll get into down the road, not down the road, but down into the video more. So then I had Roku Calls. And Roku, I'm just expecting it to have a massive bounce. And every time you think it's going to have a massive bounce, it just doesn't. But I think this week will be different. Next week will be different. As earnings, let's see. I'm on the 11th. Yeah, I grabbed 195 calls at 10:04, which is right here. As you can see, I was expecting it to bounce. It dropped pre-market. It came. Dropped. Pre-market. Then it dropped. It opened, and it came back up, popped back up, and it got over this 180, 280, 183 area. Actually, I said one over calls over 184, which is right here. So. Yeah, I got the 195 calls at $2.12, and they went from 212 to 336. So that was a nice little move right there. I really still think that Roku is going to have one of those $20, $30 days. Every time it starts to get a move, it just gets squashed, and we'll just have to see if it happens this week. I mean, obviously tomorrow is a holiday. Martin Luther King Day, the market's going to be closed, so it's going to be a short week. But I think Roku, it's due for a massive pop. Anyways, enough about Roku. SPY. Let's see. SPY puts at 10:16 on the 11th. Okay, just making sure I get the right day. Blow it up a little. 10:16. I got it right here on the 20. No, I got it right here. I think I grabbed it right here. Yeah, I grabbed it in this candle. Sometimes, not always, do they not always reject the 20 EMA. It did come up to it and rejected this next candle, but I grabbed it too early. Sometimes it doesn't always do that. Like right here, it gets away from it, comes back down. It didn't touch it, but sometimes it gets close to it, and I prefer that it touches it, but it didn't here, so I grabbed the 460 puts again at $1.40, and they went from $1.40 to $1.88 right here in that little dump right there. So that was a nice little play. Then I grabbed PayPal on the 11th. Just gonna make sure I get the right day. I grabbed PayPal 187.50 puts at 1206, which is rate 1206 right here. Yeah, I grabbed it right in his candle right here, and it got this little bit of a move right there. It didn't come down to the 20 EMA, but that's what I was looking for. It gets so far away from it, and I thought for sure it was going to. Now, when price gets this far away from the moving average, it does one of two things. One, it either comes back and retests it, or it chops and stays elevated to bring the moving average to it. So you do have to understand that one or two scenarios do happen when it does happen, when it gets disconnected from the 20 EMA, that it did drop a little bit. So I did get it at 179 and went to 203. So I did take that little bit of a move right there. So that was a nice little quick play, small base hit. So focus on the base hits and not the home runs, because you're going to get burned. SPY. Took SPY puts at, let's see. Let's see. This is the 11th. So timestamp 108, which is probably right here. 108. Yeah, it was in this candle right here. Probably the triple top is where I grabbed it. I grabbed the 469 puts and got this little bit of a drop. I got about $1.52 and it went to 172. And as you can see, it did pretty much the same thing. I got it disconnected from the 20 EMA and it practically chopped. And I thought it was going to drop to it more, but it just chopped and brought it to it. So basically rode the 20 EMA up. It did finally touch it here, but yeah, I was expecting it to drop more right here to probably even VWAP, but as you can see, it rejected this area, this 468 area, like 1, 2, 3, and this is the fourth time, and this is where I grabbed it right there. And luckily, I was a quick little play in and out, then it popped. So just watch time and sales, and when you're green, you need to start, taking your money, and when it starts going against you, you need to get out when it breaks even. Can't let a winner turn into a loser, and you just need to get into that mindset. As soon as you get in the trade, watch the time and sales. That's what I do, and that's how I end up getting out. So on Wednesday, my streak ended. I had 6 wins and 1 loss. On Tuesday, I had 5 wins. Let's see. Yeah, 5 wins. And if you're not a premium member, you have an SPX challenge, and the SPX challenge is exactly what I'm doing. The base heads, go in there, take your 50 cents, take your $1. Don't hold for a home run. If you're holding for home runs, you can't do that, and I'm not doing that with the SPX challenge. Maybe when it gets bigger, the account gets bigger right now. So the account's up almost, I think, close to 100% right now. But I'll probably be 100% this week. Then once I start getting the account a little bigger, I'll start adding size and start doing things a little different. But right now, I'm trying to be very cautious on the challenge and trying to stick to my plan regardless of how much it moves and stuff like that. So anyways, on the 12th, I had, for trade ideas, I had Baba puts under 136 and PayPal puts under 187. So but I took SPY first. SPY puts on the 12th. I mean, you get this nice little run up right here. I mean, it went from 462 to 470. So almost had a $10 run up from the time it opened. Yeah, it was a $10 run up from the day, but from the previous day's lows. So I grabbed the puts right here. I had the 471 puts right at 936, so I grabbed it right up, and I think I grabbed it up here, and then it dropped. So they went from 127 to 150, so that was a nice little play. Then I ended up grabbing PayPal puts. PayPal has just been doing really well on the put side for some reason. I grabbed it right here. Now on PayPal, let's see, Wednesday, it gets into this 192 area and rejects. I had the strong move up right here on Tuesday. then it this is why I grabbed puts right here. Now, if I held them overnight, they would have been really nice. But I grabbed them the next day. What price did they have them at the day before? I had them at 179 right here, right in here, and then I bought them again, and they're at 201. So yeah. But yeah, I had this nice little run up right here. Look how far it is from the RCT trend line right here. I mean, look at this massive disconnect. It gets this far away from it, it's going to run to it. I dropped quite below it, and it came back to it, and it went above it, come back down to it. This thing is a magnet. You can play in this direction almost every time. And that's exactly what I did. It got disconnected. I was actually trying to get it here, but it didn't. So when it gapped down, it popped back up. And then when it got below this area right here of what time did I grab it? Oh, the time stamps are blended in. I hate that it does that because I was playing two plays at once. I did that quite a few times this week. 9:41. So yeah, I grabbed it in this candle right here. I'll blow it up. I waited for it to break the ORB, which is open range breakout or breakdown. I grabbed it right here, the 188.30-ish area, and I had the 187.50 puts at $2.01, and they went to $3.70 if you held all the way through to the RCT trend line. So then I did have BABA puts. Let's see, BABA puts on Wednesday. Yeah, I remember this play because it was very choppy. I had a rate. What time was this? Timestamp 10:04. I had it right here. This candle right here pop back up, and usually in the past, and anytime BABA does gap up, it does like to give it away, give up the gains and fill the gap overnight. But sometimes it likes to hold. So when it popped back up, because I was watching it right away, and it had this strong move up, and it came back down. I was like, okay, it's gonna finally come down. So I grabbed it right here. Then it just chopped, and I got the 135 puts at $1.74. Then it finally dropped right here after it just went sideways for a long time. So not much of a move, only like a 25-cent move on BABA, but not a bad play. I mean, could have been worse. Now, if you sit there and you had stop losses on options, you would have got stopped out multiple times because of that. You just cannot. You got to go based on the chart. You can't go based on the option prices, because if you go based on option prices, you're going to get stopped out 90% of the time. And 90% of the time, you got stopped out for no reason. And if you're worried about the fluctuation in prices, take less contracts, take less size, and remove the emotion from it. If you're going to use stop losses on option prices or percentages on option prices, you're going to get stopped out so much you're going to lose like a lot. You cannot do that. I mean, I know that some people do, and that's on them. I'm not. And that's how I play, and that's how I do things. Just use less size, a size you're comfortable with. Go into every single trade thinking that. Play with what you're willing to lose. If you're not willing to lose this much, then don't play at all. Plain and simple. You cannot go based on percentages or option prices, because the sideways chart will eat it up. If it's expiration day, it will get destroyed. Theta will get destroyed. Will destroy it, and you got to go based off the chart. If the chart still looks good, still things look favorable, you just got to deal with the fluctuations, wait for the chart to play out. And like I said, if you're worried about the fluctuation, then use less size, because that's just the name of the game. So that's how options are, and options are risky. So then I ended up playing SPX, the next two times. So let's see, very choppy on Wednesday. I did have SPX calls. I was very annoyed with because I was holding and playing BABA, and we had missed this drop right here because of BABA, and that was one of the reasons why I was very annoyed with BABA, because I really thought BABA was going to make that strong move. It didn't. SPY made that move. And I could have had an SPX move that went up 200 or 300, 400%, and I didn't because of Baba. I remember feeling that I was kind of really annoyed with this, that I missed this because of Baba, and I didn't want to jump in it. But I did grab calls. Let's see. Actually, I did grab puts. I did grab puts right here. I did find it. But I do remember thinking that I missed that. But I grabbed puts. Let's see, at 10:39. I was looking at the wrong thing. Yeah, right here. Because, Baba was in here, and I was thinking this big red candle right here, that I was very upset that I missed this drop right here because of Baba. But I did finally take it. I did take it right here. I did take it at 10:39, and I remember putting chasing. So, I had FOMO because of Baba. I was like, oh yeah, I missed this, so I'm gonna grab it. So, knowing that it could possibly bounce right here, I still grabbed it. That's why I made the alert chasing, so that way people knew it was very dangerous. I got the 471 puts at 129, and they went from 129 to 261 in that little play. So I did chase it. That did work out. I did feel a little better knowing that I got this. I would have been really upset if I missed all of this, but yeah, I was really upset that I missed this. Then I did end up taking SPX calls. So yeah, this was SPY 471. SPX was too expensive at that point in time. Then I did end up taking SPX calls at 1124. 1124, which was, I don't know why, I should have took it right here at the 20 EMA, but no, I took it right here. Bounced off this, I took it right here. I took the 4740 calls at 305, and they went from 305 to $7.50, so 100% move right there. Then I ended up taking the 4730 calls, this time at let's see, 203, which is right here. Now, same thing as we before. It dropped down. This is where it broke out right here. It came back down and we tested this area again, and that's where I ended up grabbing it. I grabbed the 4730 calls because right back here I had the 4740. So because of expiration day, I readjust the strike. So I try to stay close to the money. That's why I never average down on expiration day. Non-expiration days I will once in a while, but on the expiration days it's not a good idea to do it, especially if it chops. You'll just burn it, and it's better to be right or wrong than it is to add to a losing position on expiration day. So I grabbed it right here, and the 4730 calls I got at $2.90, and they went from $2.90 to $5.80 right here. So that was a nice little move, and this was my first loss. I took the 256 calls. At 256 I took 4735 calls, so which is right here, because I got this move right here. It came back down. I grabbed it right here. Okay, I grabbed it right here. It came back down. I grabbed it again right here. This time closer to the money. Because, even though we got this move right here, these few candles right here on expiration day, that's 10 minutes, that's 30 minutes of theta right there. So I went to a 4735 strike, which is closer. And I thought for sure, okay, it dropped, it came back real quick. It's going to squeeze end of day. And I should have waited. And sometimes, most every time I get into a position on SPX around 2:30, 3 o'clock, I end up getting burned. And it always gives you that look that it's going to make a massive run, because right here I had a nice pop, quickly rejected. It came back really fast, and I thought for sure, boom, it was going to pop to 472. Then it just got slammed, and it finally did pop, but they never did end up going green. In fact, they came really close from going green, but not enough. So yeah, I should have waited the last 20 minutes, because that is when the moves actually happen. It's the last few weeks, it's been the last 10 minutes. So the last 20 or 10 minutes is when the moves have been happening. I grabbed it way too early right here. If I just should have been patient right here, I could have gotten the move and actually got a nice little, probably 200 or 300% play on that play right there. But it is what it is. I really thought this is where I got faked out. I really thought it was gonna pop right here, and it dumped on me instead, and that just another 30 minutes of dumping right here and chopping just killed it. So my streak was over on that play right there. So I got burned on that. Then on Thursday I had, let's see, a Trade Ideas room on Thursday. I said, oh, it's Thursday's date the 13th, okay. Netflix calls over 540, SPY puts under 471. I took 471 puts at, let's see, 943. I grabbed it right here. Popped back up, came back down, grabbed it right there, and it popped back up, then it finally dropped. So those 471 puts ended up going from 154 to $6.08 if you held all the way through. So that was a nice little play on that. Then my first loss on Thursday was Netflix. Now Netflix, Thursday right here, I really thought it was going to take off. I grabbed it right here over the 540 area. Well, yeah, I grabbed it right here, 540. I thought for sure it was going to go, that Netflix was going to make its earnings run right here, better late than never, but then it just got slammed, and then it just held right there. And I held it thinking, okay, it's going to make its, because when Netflix has this earning run, it has one of those like $50 days, and I thought, okay, who cares if it's down just a little bit? It could still easily pop, and this was this right here is where I was like, okay, it's over with right there. So I already assumed the loss, and I made up for it on the next couple plays. So that's why, my plays, I adjust my size, take a loss, and the next play I make it up. That's just how I do things, and that's how I trade, and that's how I like to do things. So you just have to manage your own plays and manage your own risks and do what works for you, and stuff like that. So yeah, I really thought that was going to be the moment Netflix was going to take off. I held it thinking it still had a chance right here, but when it broke below this 430, I should have just dumped the rest of the shares. But I was like, whatever, I don't care. It's a loss. I'll make up for it, and I did the next run. So made up for it with Tesla on Tesla puts right here. So I took Tesla puts at, let's see. Yeah, the 550 calls on Netflix, I got at $2, so I wasn't worried about that. I took the Tesla puts at 1010, which is right here. I was watching the chop right here, and I was thinking, okay, it gets below this 1100. I remember saying it gets below 1100, get the put. So I got 1070. The 1070 puts it at $5.50, and they went all the way to $45 plus if you held all the way through. Nice 700% move, and it was a nice play on Tesla. So then I had Roku. I still kept hanging on to Roku, and hanging on to the mindset of Roku and Netflix was going to bounce this way because of earnings and stuff like that. So let me just bring up the day before. I always referred to the day before. I grabbed Roku Calls at, actually, wait a minute. No, before Roku, I had SPY. Okay, let me go back over this. I had SPY Calls at 1052. 1052. Which is right here. Now you get this long drop, you get this long exaggerated candle right here, and I played that little bounce. So I had the 471 calls at $1.30, and they went from $1.30 to $2.01 in that little bounce right there. Same thing, you had this exaggerated drop, got far away from the 200 EMA, it popped to it, then it rejected it and had this nasty drop. But yeah, the 471 calls went from 130 to 201, so that was a nice 70-cent move right there. Then I played Roku. Oops, hit the microphone. Then I played Roku 177.50 calls at 1118, which is right here. Dropped down, started to have a little curl bounce. I grabbed it right here. When you see it drop like this and it starts to have like a rounding bottom, I like to try to play the previous red candle right here, and grabbed it right there. I grabbed the 177.50 calls at 145. Then went from 145 to 188. Same thing, got far away from the 20 EMA, and it came right to it, rejected it. Another one just like clockwork. Same here. It happens so much, it's ridiculous. That's why you need to pay attention to it. Then I ended up taking Tesla calls. This one was really risky to take. I took Tesla calls at 1242, which is right here. Now, I was looking at it right here, thinking it was going to bounce off the RC3 trend line, and it did. I didn't quite take it because it had a nasty drop. Plus, you had a little bit of support right here, the 1065, but I just didn't want to grab it yet, because sometimes you get these like fake moves up, then it dumps more, and fake move up and dump more, take out stop. So I did grab it in here. I did grab the 1090 calls at $5, and they went from $5 to $8 in that little push up. Same thing going to the 20 EMA. Here it didn't quite touch it, but you could have played it right there. And I definitely thought about it right there, but I didn't. But yeah, here it is right here, the 20 EMA bounce. I mean, you can see it almost every time. It gets away from it, bounces up the 20 EMA. Now, it did it a few times here. Usually, I only look for the first one, because usually the more it touches it, the more it ends up trying to break it. But I always look for the first one. The first one is the most important one. Anytime price gets away from it, like this or like this, it's going to retest it at least once the first time. Now, I always look for the first one, and the first ones end up being the most important, so that's why I really like playing those. Then I ended up having SPY end of day on, what day is this again? The 13th. Okay, I got confused. I grabbed SPY calls at 315, which is right here, right at the RCT trend line. I grabbed it right below it. I got the 467 calls. They went from 135 to 165, 30-cent move right there. Same thing, RCT trend line right there. Also, it's at 466, 473 was high. It's at a it's a $7 drop. I mean, you got to think about range. $7 move on SPY is pretty ridiculous. And it did bounce right there. So I did get that little bit of a bounce. I probably should have played that drop more. But I wouldn't have grabbed puts right here, not knowing it's already down $7. I wouldn't have thought that it would drop more, especially end of day. Usually end of day, when you have such a significant drop like this, you end up seeing usually a squeeze. And it just didn't happen. It dropped more. So yeah, I only had one loss for that day, which was Netflix. So yeah, that was my second loss for the week. Wait a minute here. Yeah, second loss for the week. Third loss was on Friday. Now, I started out with Microsoft. Now, I sit in the trade ideas room, pre-market on Friday. I said Microsoft calls over 306, and Netflix calls over 530, 525. So I took Microsoft right out of, let's see, 306 is right here. I'm using the consolidation level during after hours and pre-market right here. I did get into that. I got the 307.50 calls at $1.05, and then went to $3 in that little move. I tried to get underneath. I remember trying to get underneath $1, but it was moving kind of fast. If you take it down to the 1 minute, you can see what I was looking at, because I watch time and sale. I don't watch the 1 minute. Let's see, what time did I get that again? Let's see. 931. So I got it in this candle right in here. I can't even blow it up sooner. Yeah, I grabbed it right in here. It was shuffling around quite a bit, so I was able to get a fairly decent entry, but I tried to get underneath $1 because it was going underneath $1, and I just couldn't do it. So I ended up just taking it over $1. But they did have a nice little run on that little play right there. So that went 100% if he held all the way through. But he did pop right here, came back just a little bit and popped more. So then I ended up grabbing PayPal. That's why when I give out the trade ideas room, in the trade ideas room, what I'm looking at, you need to have the options chains up and ready to go, because sometimes these moves happen immediately and sometimes they don't. You need to be ready if you're going to take it. That's why I posted 10 minutes ahead of time, so you have enough time to decide it. If you like the move, if you like the play. If you don't like it, don't take it. Don't take it because I am. Take it because you like it. Don't take it because I am. I'm not a financial advisor, and these are my plays and what I'm doing. And just because I take it, you shouldn't blindly follow. You should more or less understand what I'm doing and why I'm doing it. And if you don't understand what I'm doing, then you need to stop and watch and learn more and understand why I'm taking it. Because I'm utilizing several different strategies, ORB, the EMA rejections. I don't use crossovers. I don't like them. I know that some people in the room like them, and that's on them, and they like them and they trade them. They do well. That's good for them. I just don't do that. So you need to figure out what works for you and what you like and adjust from there. But yeah, anyways, I took the 182.50 calls at 89 cents, and then went from 89 cents to $1.29 in that little move. So it did break the area I was looking at. I really kind of thought this was going to have a nice strong move too. After this big long down day, it was going to come back up here to the 184 area, but it didn't. Just a small pop and drop. That's why I need to watch time and sales so you can get out. Then I took Netflix calls, and now this one, this was pure luck, and this is why I had it as a lotto play, and I held it as a lotto play. I grabbed it right. What was the timestamp on that? 10 o'clock right here. I think I grabbed it right in here, thinking it was going to move. Yeah, right in here, thinking it was going to pop. It didn't. It dropped, and they were I don't even remember what they were. I got the 525 calls at $2, and I pretty much considered it a loss. Then I think they were right around 20 cents or so. Then news popped, and these things just exploded, and they went from $2 to $12, almost $13 in that move. In the news was something about going up in subscription prices and stuff like that. So, which is kind of weird that they're gonna up their subscription prices right before earnings. So I don't know if they just said their hand, told their hand, or whatever, showed their hand, and their earnings might be not that great. I don't know. We'll see. But anyways, one of the things, main reason why I held it, and you're looking at the daily on, not even the daily, the weekly on Netflix. I mean, you back down, look how oversold it is. And on the daily, I don't have the RSI up on this chart, but the RSI was below $30 on Netflix, and I don't think it's ever been underneath $30 RSI on the daily. And a very, very, very long time. If it's been underneath 30 RSI, it hasn't been like at least 5 or 6 years. So I was thinking this thing is 30 RSI on the daily going into earnings week. It's going to have a strong day. So I just held it, and I just kept staying with Netflix, thinking it was going to have that pop. Then it finally did have the pop right here. It was a news event, so that ended up working out really, really, really well. That was hugely lucky. So I'm not going to say that I knew news was coming, because I obviously never did. And but I just kept thinking, I still think that Netflix is going to have a strong week going into ER, but it's going to be too expensive to play. So. But anyways, yeah, news event. That's why they went from $2 to $13 on that. So and people in the room did get above and sell above $10. So that was insanely incredible that just happened. So then I had SPY puts at $1.58 at 1104, which is right here. This candle right here. This is where I grabbed it, right in here. I grabbed the 462 puts at $1.58, and they went from $1.58 to $2.20 on that little drop right there. Then I ended up grabbing 462 puts again at $12.43, which is right here at the lower day again, close to the lower day. And they went from $1.30 to $2.52 right there. So you get the 158 to 220 right there. Then you got the $1.30 to 252 right there. So that was a nice little move right there. It doesn't look like much, but you're looking at it, it's almost a $2 move right there. So then I ended up taking SPX puts at end of the day, and I took them at what time? 228. And this is where I got sucked in again by SPX. Right around the same time as right around, because the last time it was at what? I think less than 3 o'clock, like 2:50 or something. You just look at the alerts and see. Actually, I need to look at Twitter to see which one it was and stuff like that. So the 14th. This is the 14th. Yeah, that's Friday. It's the 14th. And it wasn't. It was Wednesday. It was Wednesday. Okay, let's back it out and look at Wednesday. Wednesday, I had it at 256 on Wednesday. Yeah, right at 3 o'clock. And this one on Friday, I had 228, so it was like 230. So yeah, let me back it out just a little bit. Yeah, right here. Yep, okay. Yeah, this time I grabbed it, puts right here. Is this the time? Yeah, right there. Now, I was thinking it popped back up, had this massive candle up, then it rejected this 463 area, and it came back down really quickly. No, right here is where I grabbed it, right there. Rejected the VWAP. This is what I remember. Came back up, rejected VWAP, and it had this nasty red candle right here. Huge rejection. I think it was almost $1 rejection right there. And I thought, okay, it's going to slam. And I grabbed it right there, then it popped and reversed on me. So yeah, that was the last play, and I was like, okay, I'm done. I'm not touching anything more, because especially if you try to play the other side, Friday end of days have been really, really tricky, because of that's where you end up seeing most of the shenanigans, and they try to pin it and they try to chop it and kill both sides. So I was like, okay, I'm not going to chase it on the call side and get burned on both sides. I'll just take my loss, call it a day. I had a good day, good week. I mean, I couldn't ask for a better week. This year is starting off very, very strong, so I'm not going to complain. So, yeah, that is how the week shaped up. Hopefully next week will be just as good. Now, I'm imagining that next week is going to be very volatile, so even though it's going to be a short week, I got earnings coming in, so I think we're going to see some ER runs. So, but that's going to do it for the recap. I hope this has helped you understand. I know that I probably got off topic and probably ranted a little bit, but it's just, you got to understand what I'm doing and why I'm doing it, and you just got to find what works for you. Just because things work for me doesn't mean they will work for you. You need to find what works for you and adjust on that. So that's going to do it for the video, and thanks for watching.